So hello, what's up? How is everyone doing? Welcome. Welcome to another English revision. English revision for our cutie South Indian students who want the English revisions. So in this revision, we are going to revise SAE, that is Standard on Assurance Engagement 3400. So like all our revisions, we are going to revise all the concepts. Along with the concepts, we are going to revise the questions of ICA study material, RTP, past exams and MTBs. Before beginning with this video, I request all of you to like this video. Okay, put your attendance by liking this video. Okay, sir. And the next thing is, if you are new to the channel, do subscribe the channel. From where you can download these board notes, these are available on our Telegram channel, Clear CA with Shubham Keswani. Again, the link is in the description. So before I start with and tell you what is SAE 3400, we need to revise some basics first. So the first basic is, what is an assurance engagement? Let's understand the definition. Assurance engagement means an engagement where you give an assurance, where you give your opinion, and that opinion helps the user to increase the confidence. It increases the confidence of the user. So assurance engagement also means that the practitioner who checks the thing, he will express the conclusion. Sir, this conclusion will be about evaluation of some subject matter against a criteria. Now, sir, when I give my conclusion, what is the benefit? The benefit is it enhances the confidence of the intended user. Let's understand this definition with an example of audit. Can I say audit is also assurance engagement, reasonable assurance engagement? Yes, sir. In the audit, our practitioner is the auditor. Instead of conclusion, he expresses the opinion. Sir, opinion about evaluation of financial statement against applicable FRF. That is the criteria. And once you give your opinion, it increases the confidence of the shareholders. Shareholders have more confidence in the company. So once again, let's revise this definition. What is assurance engagement? Assurance engagement means an engagement where the practitioner expresses the conclusion. Conclusion about what? Evaluation of subject matter against a criteria. What is the benefit? Increasing the confidence. Do with me. Increasing the confidence of the intended user. Is the definition clear? Yes, sir. This definition is used in a lot of answers. That's why it is important to learn it properly. Now, sir, talking about standards on assurance engagement. What does these standard talk about? So basically they deal with the subject matters other than historical financial information. So for historical financial information, we already have audit, which is a reasonable assurance engagement, review, which is a limited assurance engagement. So historical financial information are covered by audit and review. But apart from historical financial information, if there is a subject matter on which you have to give your assurance, that will be taken care by SAE. SAE means Standards on Assurance Engagement. So three standards are in your course. SAE 3400, which talks about prospective financial information, 3402, which talks about internal controls at service organization, and 3420, which talks about pro forma financial information. And in this revision, we are going to revise prospective financial information, that is 3400. So the first question that comes in your mind is, sir, what is a prospective financial information? So till now we have discussed historical financial information. Whenever we studied audit, we focused on historical financial information. That means financial statement for period ended, balance sheet as on this date. But now we will be having a futuristic outlook. We will be focusing on the projections of the next 4 years, 5 years, 10 years, forecast for the next 4 year, 5 year, 10 year. So when you think about the futuristic financial statement, they are called prospective financial information. And definitely, if I want to go from historical financial to prospective financial, what will I take the help of? I will make some assumptions. I will have to make some assumptions, and in this SAE, the main game is of assumption only. And that is what the definition says: financial information which is based on assumption. Sir, assumption about certain future events, and based on the events, what will be the actions of the entity. Okay, so the main game here is all about the assumptions. Let's understand with some example what are the different types of prospective financial information. So there are three types: forecast, projection, or a combination of both. First of all, let's understand a forecast. Forecast is based on expected assumptions. ठीक है, it is based on expected assumption. Sir, expected assumption about same two things, what event will happen and what will be the management action. And because these are expected assumptions, they are considered to be best estimate assumptions. They are the best estimate assumptions based on the experience. For example, if in the past, if in the past we have seen that the sales grow by 5%, the sales have grown by 5% in the past, so can I say if in the past sales have grown by 5%, in the next quarter also sales will grow by 5%? Yes sir. So based on the experience, I am saying that the expected sales growth is 5% in the next quarter. So whenever it is based on experience, it is the best estimate, and then it is called expected assumptions. So this is a forecast. So sir, what is a projection? Projection is not your expected assumption. It is a hypothetical assumption. It is a hypothetical assumption, again about the same thing, future events and management actions. Because it is a hypothetical assumption, it is not expected. It is because it is not based on any previous experience. You are just making it in your mind. Examples. Let's understand three examples. Let's say there is a new startup. There is no previous trend available. So in the startup, we are projecting the revenue, that the revenue will be 500 crore, 1000 crore. There is no backing up by any data. It is a hypothetical assumption. Second thing, we think of launching a new product, and with that new product, we expect that the growth will be 10%. 10% growth will increase. So again, is there any data backing it up? No, hypothetical assumption. And the last case, we expect to put a new plant, and then we project 7 years cash flows, that when we put this plant, what would be the cash flows in the next 7 years. Again, it is a hypothetical assumption. So just summarizing it for you, whenever there is a past data backing it up, it is a forecast. That means expected assumption, or you can say best estimate assumption based on the past trend. If there is no past data available, you are just playing with your mind, whatever you feel like you are putting it on the paper, it is a projection. Projection means hypothetical assumption, again about the same thing, future events, management actions, and it is not necessarily expected. And the last one is combination of these two. Sir, combination means you can mix them both by saying it is a 2-year forecast with 3 years projection. Easy peasy? Yes sir. Again, these definitions are very important, because if you see the question bank, there is a direct question on this. Let's revise what we have covered till now. Revision in revision. Assurance engagement is an engagement where the practitioner expresses conclusion. Conclusion about what? About the evaluation of subject matter against criteria. What is the benefit? It enhances the confidence of intended user. Okay? So I hope the definition is clear. Now, sir, assurance engagement can also relate to examination of subject matter other than financial statements based on historical financial information. The level of assurance which is given in SAE 3400, it is moderate. Now, sir, there can be two types of assumption we have already discussed: best estimate, hypothetical assumption. Is it necessary that the statutory auditor of financial statement should do it? No, not necessary that this type of engagement will be done by statutory auditor of financial statement. Acha, this also does not apply to examination of PFI. Instead of prospective financial information, I will say PFI. It is easy. Okay. Examination of PFI, which is expressed in narrative terms. Sir, what do you mean by narrative terms? That means in words. Management is making stories that we will achieve this, we will achieve that. To such type of things, it is not applicable. It is applicable only to numbers, that is projected financial statements. Now, sir, what is a projected financial information? We all understand it is a financial information based on assumption. Assumption about two things: events and actions by the entity. Now it can be in the form of forecast, projection, or combination. Quick revision, please focus. Forecast is what? Sir, these are expected assumption. Expected assumption about the events and actions in the future. Or you can also say best estimate assumption based on experience. But what is a projection? It is a hypothetical assumption which is not necessarily expected. Again, these examples we have already covered. You got the point or not? Yes, sir. Now, sir, the next topic, before discussing the next topic, let's revise professional ethics, our favorite chapter. Take 2 sips of water, get ready. So in professional ethics, we study a clause. Remember clause 3 EOE. Always while revising clause 3, I used to say EOE. So clause 3 part 1 of second schedule says, whenever you associate your name or your firm's name with a report of EOE, EOE means estimate of earnings. Again, these earnings are contingent on the future transaction, and you are making the user believe that you vouch for accuracy of forecast. So whenever a CA in practice does this thing, he is guilty under clause 3 part 1 of second schedule, something we have already studied in professional ethics. Now sir, for this clause there was an exception. There was an exception that you can associate your name with some projected financial information or prospective financial information if three things are written in your report. Sir, what were the three things? It is clause 3. So three things should be there in your report. Bus, we know, sir. What do you mean by bus? Bus means these three things should be there. B for basis for forecast, A for assumption based on which you have prepared the forecast, and S for source information on which you have applied the assumption. And at last, you have to mention that you don't vouch for the accuracy of forecast. You don't vouch for accuracy of forecast. The forecast accuracy you don't vouch. Okay, sir. So considering this only as a basis, we will draw everything in this chapter. Everything in this chapter is related to this concept only. So the first thing you need to understand is nature of assurance. Nature of assurance may you will understand, can I give the opinion that the results of PFI will be achieved? The answer is no. Because it is futuristic. See, we are chartered accountants, not astrologers. We are not astrologers, so we cannot say that this result will be achieved. No, you can't say. So as a practitioner, opinion that the results of PFI will be achieved, it cannot be given. Such opinion cannot be expressed. First topic of the day. What are the management responsibility for preparation and presentation of PFI? So can I say the main responsibility for management is PFI identification and disclosure. They have to prepare the PFI and disclose certain things. What are the three things to be disclosed? Bus, sir, we know. What was bus? B for basis of forecast. On what basis did you create this forecast? Based on some historical trends, maybe you are having some future orders in hand. Then A for assumptions, expecting the demand to grow by certain percentage, and S for source data, maybe you are using the past 3 years data to draw this forecast. So four things are the management responsibility: PFI identification and disclosure. Then three things to be disclosed: bus, sir, we know. B for basis of forecast, A for assumptions, and S for source data or information. These four things are the responsibility of management. You got the point or not? Yes, sir. Now, sir, after the management, let's talk about the responsibility of practitioner. Sir, what are the responsibility of the practitioner or the member who is examining the PFI? First of all, tell me, in this PFI, what is the most important thing? Sir, it is the assumption. If you want to go from historical financial to prospective financial, what helps you? It is the assumption. So the main focus of us as a practitioner who is checking this PFI is again the assumption. So the first thing is, we want sufficient and appropriate evidence, not audit evidence. This is not an audit engagement. Sufficient and appropriate evidence whether assumptions are proper. Make sense? Yes, sir. Achha, what are the two types of assumption? Best estimate assumption, hypothetical assumption. So first of all, see whether the management's best estimate assumptions, these are not unreasonable. That means they are reasonable. And the hypothetical assumptions are consistent with the purpose of information. So what do you mean by that? Let's say I am preparing a projection. Projection is hypothetical assumption, right, sir? I am preparing a projection for my new plant. Okay, I have taken the money for building a new plant and I am projecting the cash flows. So again, whatever sales I am expecting from the plant and whatever expenses I am expecting, based on the sales and expenses, I will draw the projected cash flow for the plant. So whatever projection I am doing, that is the hypothetical assumption, they should be consistent with the purpose. That means they should be based on what I am expecting from that plant. Make sense? Yes, sir. So the first thing to check is assumption, best estimate assumption, hypothetical assumption. Once the assumptions are proper, what will management do? They will prepare the prospective financial information. So check that PFI is properly prepared. prepared based on two things, on the basis of assumption, and secondly, it is based on the historical financial statement using appropriate accounting principles. Sir, what do you mean by appropriate accounting principle? Let's say I am creating a projected P&L. So in the projected P&L, the depreciation should be as per Companies Act or Income Tax Act. Sir, not as per Income Tax Act, but as per Companies Act. So the first thing as a practitioner, I check the assumption. Then I check the preparation. Preparation on the basis of assumption and historical financials plus appropriate accounting principles. Now, sir, assumptions are proper. It is prepared as per the assumption. Last thing that I want. Last thing that I want is once the PFI is prepared, it should disclose. I know the assumption, management know the assumption, but users should also know the assumption. So it should disclose the assumption. So PFI is properly prepared and all the material assumptions are disclosed. That means best estimate and hypothetical assumptions are disclosed. So this is your favorite question of ICI. Everyone please revise with me. First thing, we need evidence. Assumptions are proper. Then it is prepared as per the assumptions and accounting principle. And then the assumptions are disclosed. It is properly presented and the material assumptions are disclosed. That is best estimate and hypothetical assumption. Easy peasy? Yes, sir. Acha, can I give the opinion that PFI result will be achieved? No, sir. You cannot give any opinion that PFI result will be achieved because events and actions have not yet occurred. They are expected to occur in future and we are chartered accountants, not astrologers. So evidence to support the assumption is future oriented. It is speculative. So you cannot give the opinion that PFI results will be achieved. This we discussed before also. We are discussing now also. Clear, boss? Clear, sir. Now take 2 sips of water. Now we are moving to the next topic and we are going to discuss it. Get ready. Acha, before I move ahead with the next topic, let's do some questions from your question bank. I'll just make you go through it. Okay. See the first question of your question bank. See what it says. This is a question of your ICI study material MTP May 24. First question says, as per SAE 3400, prospective financial information can be in the form of forecast, projection, or a combination. How do you differentiate a forecast from a projection? This is the first part of the question. So in this, you just need to write the theory, explain what is a forecast. That forecast is based on expected assumptions about two things, events and actions expected in future. It is the best estimate assumption based on anticipated experience. These are the keywords. Then give an example that we are expecting the sales by 5% to grow in the next quarter, considering the previous period, considering the historical patterns. Then what is a projection? Hypothetical assumption, again about the events and actions which are not necessarily expected, plus a mixture of best estimate and hypothetical assumption. Then you can give an example. Now, sir, the second part, they are also asked for example. We have explained the example also. Additionally, explain the nature of assurance that the practitioner can give on PFI. What nature of assurance can you give? Can we give an opinion that PFI result will be achieved? Answer is no. We cannot give the opinion that the results will be achieved. So this is the same thing you need to write, that evidence based on which you are checking the PFI is future oriented. Opinion whether the results of PFI will be achieved cannot be expressed. Easy peasy? Yes, sir. See question number 2. How can a CA be associated with a PFI as per CA Act 1949? So first of all, explain clause 3. Okay, that a CA in practice shall be deemed to be guilty of professional misconduct if he allows the name of his name or his firm name to be used in connection with the EOE. EOE means estimate of earnings. Now these earnings are contingent on the future transaction, which lead to a belief that he vouches for the accuracy of forecast. So what are the 3 things which should be there in the report? Bus, sir, we know. What do you mean by bus? Basis for forecast, major assumption, source of information, and the last line, he does not vouch for the accuracy of forecast. Okay? So this is how you frame a proper answer. Now, sir, talking about question 3, we have not yet discussed. We are discussing now precautions. Precautions to be taken before accepting such engagement. Which engagement? Reporting on PFI. So what things to be considered before accepting such engagement? So you tell me, how do you deal with this? Sir, before signing the engagement letter, our hand is shaking. Why your hand is shaking? Sir, when it comes to historical financial information, we have evidence available. We have invoices available. We have agreements available to check the revenue, to check the expenses. But when it comes to prospective financial information, we don't have any evidence to check. How can we give our opinion on prospective financial information? Good point. So you need to check five things before accepting such engagement. First thing is where they are going to use this PFI. So what is the intended use of the PFI? Do they need the PFI for some bank loan, for raising the equity? What is the use? Plus, whatever PFI is prepared, whether it will be distributed generally or it is for limited distribution. Okay, so two things. Intended use, relate this point with this only. Use is for general people or limited distribution. Once you have comfort over these two things, then check the next three things. So what are the next three things? First thing, period covered. By this PFI, what period they are covering? Next 2 years, next 4 years, next 5 years, or next 10 years. Then the elements which will be there in the PFI. Sir, what elements? Bus, sir, we know. Basis of forecast, assumption, source information. And the last thing is nature of assumption. This, so you know, best estimate assumptions or hypothetical assumptions. So these three things again you need to check before accepting the engagement. You are getting the point or not? Yes, sir. So five things, or you can say five precautions or five things to consider before accepting the engagement. First thing is, what is the purpose? ठीक है, intended use of the information, whether it is for general or limited distribution. Once you are comfortable with these things, then take a pen and sign the engagement letter. Sir, pen means P for period covered, E for elements to be included, and N for nature of assumption, best estimate or hypothetical assumption. Got the point? Yes, sir. So come to your notes. Same points are written in your book. Let's revise from the book. Precautions to be taken by auditor. Sir, why have they written auditor? Because auditor can also do the checking of PFI. So precautions to be taken before accepting such engagement. So before accepting a PFI, auditor will consider five things. First thing, intended use, then related with whether it is for general or limited distribution. When you are satisfied, take a pen. Pen means P for period covered, E for elements to be included, N for nature of assumption, whether they are best estimate or hypothetical assumption. Now, sir, two more things are there in your book. On this question is asked by ICI. What are the conditions based on which you will decline or withdraw from the engagement? Can I say in this engagement, the most important thing is assumption? Yes, sir. So if you are not happy with the assumption, okay, assumptions are unrealistic, don't accept the engagement. Or the second thing is, you feel assumptions are good, but they are using it for a fishy purpose. They are going to use for some fishy purpose. So you feel, where am I? That they are going to use it for inappropriate use. Okay? The intended use is inappropriate. Don't accept the engagement. Second question that ICI can ask is, how can we formalize the terms of engagement? How do you formalize? By writing the terms of engagement. In which letter? Engagement letter SA 210. So you can formalize the terms of engagement by sending a engagement letter like in any other engagement. Easy peasy? Yes, sir. Now let's do a question that will give you more comfort. Question number 3. See what it says. What factors will you consider before accepting the engagement to examine the PFI? Sir, these are the 5 factors we already covered. Last time we are revising revision in revision. First thing is intended use, general, limited distribution. Then take a pen. Pen means period to be covered, elements to be included, nature of the assumption, best estimate, hypothetical assumption. What conditions will you decline or withdraw? Sir, when assumptions are unrealistic. Intended use is inappropriate. How will you formalize the terms of engagement? Again, by entering a engagement letter. Easy peasy? Yes, sir. Now let's move to the next topic, that the nature, timing and extent of examination procedure will depend on what matters. A 5-marker question has been already asked on this topic. Again, this topic is in your question bank, study material, and also past exam it has been asked. Take 2 sips of water, get ready. So sir, whatever examination procedures I am performing, okay, as an auditor or practitioner, whatever you want to say, you can say. It will depend on 3 factors. First is my engagement team. How knowledgeable and experienced is my engagement team with such type of engagements? Okay, just give me a moment. Yes, everyone. So obviously, if my team is knowledgeable, they are experienced, they will have to do less procedure. Okay, even in less procedure, they will be able to achieve the assurance. So knowledge obtained in previous engagement, experience with such type of business and reporting on PFI. After the engagement team, the second factor is management. How competent is the management? If the management is competent, I will have to do less testing. Second thing is how much judgment is involved in preparing the PFI. If the judgment is high, again, I will have to do more testing to see whether the judgment is proper or not. And the last thing is stability of the business. If the business is going stably, ठीक है, every year they are seeing a growth of 10%, 15%, that means I can have a comfort over the PFI. But if it is an unstable business, again, I will have to increase my testing. So your nature, timing and extent of procedure will depend on three types of matter: engagement team, management and business. Engagement team, knowledge and experience; management, competence and judgment; and engagement team, oh sorry, last thing is business, that is the stability of business. And these are the same points you will find in your book. See what are the points. Nature, timing and extent of examination procedure depends on certain matters. First of all, engagement team. Knowledge gained in previous engagement. Engagement team experience with such type of business, industry and reporting on PFI. Management's competence and management's judgment and the stability of business. Other 2 points you can just take a read. For example, likelihood of material misstatement. If you feel the risk of material misstatement is high, you will have to do more testing, and you also need to consider the source of information. Okay, sir. Now, sir, last topic before we move to the reporting part. Okay, keep a smile on your face. That cutie smile. Yes, sir. This is the easiest topic of this standard, which says presentation and disclosure. Whenever you are evaluating the presentation and disclosure, remember I told you in the beginning, sir, what did you tell us? I told you that as a member, what are your duties? Checking the assumption, that the assumptions are proper, best estimate assumption are not unreasonable, hypothetical assumptions are consistent with the purpose. Yes, sir. Then see whether it is properly prepared, that it is prepared as per the assumptions and appropriate accounting principle. And the last point was check whether it is properly presented and assumptions are disclosed. So you need to check the presentation and disclosures. Okay, and this is what we are doing right now. We have to check the presentation and disclosure. So first of all, understand the points. Okay, so first thing you need to see is that the accounting policies are properly disclosed, like we also disclose in financial statement. Changes in any accounting policy should also be disclosed, and any reason for change should also be disclosed. Easy, sir. Apart from accounting policy, what should be disclosed? Assumptions. Best estimate, hypothetical assumption, all assumptions should be disclosed. Plus, if there is an uncertainty in some sensitivity of results, you feel such profitability may not be achieved, that uncertainty should also be disclosed. Second, other thing you need to disclose is the date. On what date you are preparing the PFI, because on this date only these assumptions are appropriate. The date on which PFI is prepared, we consider that assumptions were appropriate on that date. And the next thing that you need to see is presentation should be informative. All proper information should be there and it should not be misleading. Can I say the points are very easy? Now learn them. Sir, how to learn them? In your school, in which class you used to focus the most on presentation and disclosure? Drawing proper A, B, C, D. Sir, KG. So whenever the question comes on presentation and disclosure, you need to write about A, B, C, D, E. Sir, what is A, B, C, D, E? You need to disclose A for accounting policy, B for best estimate hypothetical assumption. So that time is gone when A for apple, B for ball, C for meow, cat. Now you say A for accounting policy, B for best estimate hypothetical assumption, C for change in accounting policy, D for date on which PFI is prepared, and E for misleading. See whether it is properly informative and not misleading. Easy peasy? Yes, sir. Again on this concept, there is a question number 4. See what it says. What matters will you consider in determining the nature, timing and extent of examination procedure? Sir, what type of engagement it is? Engagement to report on PFI. So this is how you identify the answer. Examination of PFI. Now you know it is a question of SAE 3400. Which topic? Which topic? Sir, No, not question 4. Sorry. Uh, question 5. I think we have focus on question number 5. Yes. Question number 5 says which topic? Prospective financial information. Again, you know, SAE 3400. Okay, sir. Now in SAE 3400, which topic? We are focusing on presentation and disclosure. So A, B, C, D, E wala points again you will find here. A for accounting policy. B for best estimate hypothetical assumptions should be disclosed. C for change in accounting policy. D for date, and E for it is not misleading. Acha, let's do the question 4 also. What matters will you consider in determining the nature, timing, and extent of procedure? This we divided. Engagement team matters. Knowledge of engagement team, experience of engagement team, management related matters, competence of the management, and judgment of the matters. And the last point was stability of business. Easy peasy? Yes, sir. Now, sir, we are in the end game of this standard. This standard is just about to get over. The last thing is about the reporting. In reporting, I don't think there is something critical here. Very basic things are there. Title, independent assurance report, addressee, whom it is addressed to, identification of PFI, then reference to the standard which is applicable. Management is responsible for preparing the PFI, including the assumption. Then, sir, what is the purpose for PFI? Restricted distribution. Okay? Then talk about your examination procedures. Then, sir, negative assurance as to whether the assumptions are reasonable or not. Then you give your opinion, okay, that PFI is properly prepared on the basis of assumption. Sir, you to said that opinion has to not be given. Arey Baba, opinion that results will be achieved. This opinion is not to be given. But opinion that whether PFI is properly prepared on the basis of assumption, properly presented, this opinion you can give. Okay, there is a difference between the two. Okay, sir. Then some terms and conditions, caveats about the achievability of results. These you can give. Date of report, place of signature, signature. Basic things which are there in every report. Just read them. Now, sir, few things are given. Let's understand them. What will this report talk about? It will say that based on the examination, anything has come to the attention which says that assumptions don't provide a reasonable basis. That means anything has come to the practitioner which says that assumptions are not reasonable. So what do we call such type of opinion? Negatively worded opinion. Okay, sir. And then you give the opinion that PFI is properly prepared on the basis of assumption and presented as per the financial reporting framework. Apart from this, two more things to be stated. Just read them. You need to tell the users that because it is a prospective financial information, it is futuristic, the actual results can be different from the PFI. Okay, so the actual revenue can be different, actual profits can be different, because anticipated events generally don't occur. There can be variations, and such variations can be material. Also, when PFI is expressed as a range, sir, what do you mean by range? Example, revenue can be 5 to 6 crore, 5 to 10 crore. So actual revenue may be out of the range. Okay? Actual revenue may not be in the range. So if the range is 5 to 6 crore, actual revenue can be more than 6 crore, or it can be less than 5 crore. So such type of things must be told to the user. And in case of projection, you know what is projection? Hypothetical assumption. There is no past trends. Okay. So in case of projection, the assumptions are hypothetical assumption about events and actions which are not necessarily expected. We studied in the beginning only. Okay, sir. And readers are cautioned. Readers should be alert that this should not be used for any purpose other than the intended use. So let's say we have created the projected financial for a bank loan. So apart from this bank loan, there is no other use of this projected financial. You are getting the point or not? Yes, sir. So such cautionary statements must be told to the reader. Again, just read them. In case ICAI ask any case study based question, you will be able to handle. Last thing in the report is modified opinion. Sir, when do we modify our opinion? When you are not happy. So let's say you feel that the presentation and disclosure is not adequate. Then in that case, you can give a qualified or adverse opinion, or you can also withdraw. So for example, they fail to disclose some sensitive assumptions. So you can either qualify or give an adverse opinion, or you can withdraw. Second thing, if the assumptions are unreasonable, can I say the core thing of a PFI is assumptions? And if the assumptions are bad, the impact will be material as well as pervasive. Yes, sir. So in this case, you directly give a adverse conclusion. You directly give a adverse opinion, or you can withdraw. So withdraw was here also, withdraw is here also. And the last thing is, if there are certain conditions which preclude application of procedure, that means you are not able to perform your procedure. Because you are not able to perform your procedure, you don't have proper evidence. So when you don't have evidence, don't give your opinion. So directly you can give disclaimer of opinion or withdraw. So can I say withdraw is in all the cases? Yes, sir. So let's revise the three modified opinion again. Not happy with presentation disclosure, give a qualified or adverse opinion or withdraw. Not able to get the evidence, not able to perform the procedure, don't give any opinion, disclaim the opinion or withdraw. Not happy with the assumption, impact is material and pervasive, give an adverse opinion or withdraw. And the last point is documentation. Whatever evidence you have collected in this engagement should be documented so that the people get to know you have performed your engagement as per the standard. So very basic thing, just read it. Now, sir, before I wrap up this session, I want to do an amazing cutie question with all of you. That is the question number 1, test your understanding. I am expecting this question very soon in your exams. Okay, amazing question. See what it says. A company has approached CA Hemant for an assurance report on PFI with standard SAE 3400. While going through the project details, it is noticed that the depreciation on the fixed asset is calculated on the basis of Income Tax Act. Is the depreciation calculated on the basis of Income Tax Act or Companies Act? Sir, Companies Act. So can I say PFI is not prepared on the basis of proper accounting principles? Yes, sir. Plus, no disclosure is made in this respect. Can I say presentation and disclosure is not proper? So when presentation and disclosure is not proper, which opinion you give? Qualified or adverse opinion, or you can withdraw. So this is how you need to write your answer. See what it says. It is our duty to see that the PFI is prepared on the basis of appropriate accounting principle. We learned na in the duty 3 things. Assumptions are proper, it is prepared on the basis of assumption, then disclose the assumption. So assumptions are proper, first thing to check. It is prepared on the basis of assumptions, appropriate accounting principles. I gave you this example also, that P&L depreciation should be as per Companies Act. And lastly, you disclose the assumption and proper presentation. Okay. So first thing you write in your answer is, it is our duty to check that the PFI is prepared on the basis of appropriate accounting principles and assumption. Company should prepare the historical financial statement as per Companies Act, and depreciation is also calculated accordingly. However, in the given situation, depreciation is as per Income Tax Act, which is not consistent with historical financial statement. So this is not proper. And lastly, you say, because presentation and disclosure are not adequate, we will give a qualified or adverse opinion, or we can withdraw like it is there in every case. Easy peasy. Yes, sir. So with this, your SAE 3400 is done. So can I say SAE 3400, only concept pata hai that you should focus on is in understanding that from growing from historical to prospective, the main thing is assumption. Now these assumption can be of two types. Either they can be best estimate assumption, that is a forecast, or they can be hypothetical assumption, that is a projection. And all we need to focus on as a practitioner is assumption. Once you understand this basic concept, how the answers are framed, what logics to apply, what techniques to apply, this I have already told you. So maybe in this revision, we have taken around half an hour, but next time when you sit and revise, it should not take more than 10-15 minutes, because that's what you need. Okay. So thank you so much everyone for joining for this revision. If you liked it, do give it a like. New to the channel, do subscribe the channel, and do share your experience in the comment section, because your appreciation is my motivation. So keep studying with happiness, and then only you progress. Keep going everyone. Soon you'll be a chartered accountant.